GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. Well, Bitcoin just rose over 60,000 over the weekend, so it's now retesting its old record high, so that has been an interesting move. That's off the back of the approval of two Bitcoin futures ETFs. Last week we saw more big gains in the value of oil. We saw a sharp sell-off in gold at the end of the week, so we'll talk a little bit about that. And otherwise, some of the major currencies had been seeing some strength, but actually rolling over a little bit by the end of the week, in part relating to that strong US inflation data. So still some decent volatility in markets. Let's go through each of these charts now. If there's some other charts you'd like us to cover in these videos, just drop us a comment in the video, the chart you would like to look at. Or any other questions, again, drop a comment or just click that like button, please. That really does help us spread the word about these videos. So let's have a look at the euro-dollar currency pair to start with. We had talked about this broken downsloping trend line last week. But we had highlighted the supply area, and that has been working in terms of the price rolling over. And it's one of those examples where you don't actually even need to have looked at the higher time frame. But since we have been discussing this big breakdown on the weekly chart, it is worth keeping this line in mind. This is the original low here. It was low again, and it was what we broke 2-3 weeks ago, which was potentially a bit of a significant moment in the euro. And so now, as we look back on this 4-hour chart, you can see this is actually the level that's been holding. So while we're below this big breakdown on the weekly chart, it's looking a bit bearish for the euro, even after this downtrend line break. It just meant that the momentum of the downtrend has slowed a bit. It was time for a pause. And maybe we don't even get below these lows for a while. Maybe we go sideways, but it's not to say that the overall trend is turned higher necessarily. And so what we've now seen is that this short-term area of support, we've seen the price break down. So that was obviously the kind of former high, right? So this what you want to see if the uptrend is taking place. You want to see the breakout above the former high, so making a higher high. And then ideally what you want to see is what we started to see here is a higher low. So first a higher high, then a higher low at the previous highs that were just broken, and then the price kind of rallies up or whatever. But as it is, we kind of double topped here at this supply area, and now we've rolled over through this kind of short-term double top neckline, and so momentum back down to the downside. We did see that break above the downtrend line here with this bullish engulfing candlestick. So that offers some area of demand down there. If you still think this if you still think the euro has a chance to rally up through this area of resistance up here, or even if you don't, the risk to reward is not too bad from the lows down here up to the highs up here. If you think we just go sideways for a while, that's still potentially an attractive trade. Or just, if it does get back down here, I mean, experience tells me that triple bottoms are quite rare. So it's unlikely that support holds again for a third time. But if you get down there, obviously the risk reward for buying it in the chance that it goes back up to the this big long-term resistance again is an attractive risk reward, even if the trade itself is not that likely to come off. So that's the euro. Now moving on to the British pound, which has been much stronger. And I want to talk you through some of the sort of pivotal moments of how I was watching this market. So this was the big breakdown, and we referenced last week this whole area in here actually. We had highlighted as a supply area, sort of around 137, but a lot of this area underneath it. So the price rallied back up, but with it still below the 20-day moving average, and after this big sell-off, I was still looking for opportunities to sell the market down. Now, we didn't quite get back to this area here, so people might have got into trades here for other reasons. For me, looking back to this, and then you start to see one sell-off from here, and then this was an interesting one where you had the false breakout through the level, formed a sort of evening star, shooting star type candlestick, and the price started to sell off. So this was a decent sell signal here, where there was the support that triggered, that gave way for that big downtrend, got a little bearish candlestick pattern there, and a bit of follow through. So this was looking good, but then you see the price just came back down to the support, a little probe down to this low down here, but that was just intraday, and you can see it just started holding this support, which is fine. It may have eventually given way. Then you sort of trade up to the top of the kind of the short-term range, and you had the 20-day moving average in there acting as resistance. Then you had a sell-off from the 20-day moving average. That was looking good. But then you got this big bullish engulfing candlestick, which took the price back through the 20-day moving average and it didn't even get back down to this support area. At this stage, this is when you start to realize that probably this trade here, the sell from the resistance, is not panning out, because we're not getting an extension down towards the lows here. Actually, the upside momentum is continuing, and that's eventually what we got. We got a test of the resistance on the next candle, and the next one, a little probe through, hovered around, and then the big move up to the previous highs, when it was realized that the kind of bulls had taken over here. The bears weren't selling it back down through the resistance, and then a neat little pullback back to the the same, just before this big bullish candle here, a little kind of small demand area, basically pulled back toward, depending on where you drew this line. Okay, maybe you drew it through the high, something like that. Then you got to pull back to that, and then a rally up, and then through this high up here, and just about testing this little supply area up here, which was kind of first triggered, the price was up prior to that, right? And then we've got this sell-off down here, so this kind of supply, and we've tipped back a bit from there. And we're now in overbought territory on the RSI, on the 4-hour chart. So you can sort of see how this trend has evolved. It was at this stage, it was just a pullback, but eventually the price stabilized and rallied up. And so now you've got to conclude, after having achieved this break to the top side, I think we've got to take away that the price is still positive. You can look back to the high time frames, and I don't think there's a lot you can take away from here in terms of, you can say that this last section of the trend has been sort of generally down sloping, right? We made new lower lows down here, and we've rallied up. So maybe this is just a correction. From these, this is how I've had it drawn in before. From these highs, it's sort of a bit more sideways, but down sloping. But I'm not sure you can take a lot away from this high time frame. And just looking at the price action on the 4-hour chart, it just seems to be quite a it seems to be a positive move in the market. It seems to be more like buying dips at the moment than selling the rips. Okay, let's move on to dollar yen, which still remains pretty much the most exciting forex pair to be in. Trend just soaring higher, and again you can trace back the price action a little bit here. This was our period of it going very much sideways, and we talked about at the time that it's this kind of sideways go nowhere. Okay, let me get rid of this. Sideways kind of go nowhere range, and that once that gave way, you got the break test, and then once this was underway, then it was obviously looking strong at this point, and then at that point the new trend was underway. Ran up to 112, a neat pullback from 112 to just under 111, consolidated in 111. You can see this was like the first pullback here, and actually this ended up forming kind of the neckline of a little double bottom pattern here at the end of this pullback to 111. Rallied up through that neckline, pulled back to it, rallied up to 112, gave a little pullback opportunity from there. Big bullish engulfing up to this long-term area of resistance, which was, I think we have to go to the weekly chart to see that. These highs through there. And then once that gave way, this big long-term area of resistance up here, you can see why the price just accelerated so much right into the next one, which I have to zoom out a little bit to see, is this long-term area of resistance through here. That's where we currently find ourselves. Around 114.30 is quite a big long-term, 114.30, 50 you could maybe say, big long-term area of resistance that's been capping the price since the summer of 2016. So we're talking about five-year highs that the yen is currently testing. Well, the dollar yen is testing. The yen is testing 5-year lows. So that's where we find ourselves here. That's why there's been something of a pullback there. And so you might expect, after a big rally like this and that big long-term resistance, for probably a bit of a deeper pullback than the 30 pips that we've seen so far. So I think there's maybe opportunity to wait for a bigger dip here. I wouldn't be buying into this long-term resistance. But if we do break above it and pull back to it, then okay, that's a different story. For now, this was a little double high just short of 114, double top short of 114. That's immediate resistance, immediate support now, having been resistance that gave way. If we're, say we're up above 114, a move back down to 113 wouldn't be unreasonable. And then we did have these two highs through here that stabilized the price around 112 before it rallied higher. So even a 200 pip drop down to 112 would still be above the 20-day moving average. It'd be kind of a retest of the 20-day moving average, which probably would have moved up by then. Maybe that'd be the point at which we could then move on to break this big, massive weekly resistance. But the momentum is strong. I wouldn't be looking to necessarily sell this market. We are at resistance, obviously, and there is obviously selling at resistance makes some sense, but the market looks bullish to me. All right, moving away from Forex. This is the gold market. So it's a bit disappointing from the prospect of gold bulls. We did have this trend line in here, which wasn't very meaningful in the context that we've just been going really sideways, but still the momentum, especially after we had this big rally up, it kind of looked positive for gold. We basically ticked into 1800 and stalled at 1800 and then just sold off and pretty much gave back all of that big rally. But what's going on with gold? I just think overall it's still sideways. 1720 is the kind of ultimate support. And then we've stalled at 1750 numerous times, which is the kind of round number. Also 1800 has been that kind of interim price area that the price has stalled multiple times as support and resistance. And then the top is 1830. So we're kind of working between 1720 and 1830. And I just don't think the market's made its mind yet which way it's actually going. So hence, when you saw the price stalling at 1800, the bears took over, and similar things can happen down at 1750. Stalls again, rallies. This bearish action was disappointing from the prospect of maybe this rally could have gathered a bit more momentum, but it didn't, and that makes sense in the context of a sideways market. So I'm not going to add much more on gold because I think silver's a bit more interesting at the moment. We'd mentioned this downsloping trend line here, and while gold had that big sell-off, silver didn't. It steadied around above this 23 support, which on the 4-hour chart you can see a bit better, was resistant several times, and it's held off as support. So with this holding as support, if we did get a move up through the downsloping trend line, yes, we'd be testing into this supply area, which again also could be tricky, and could see a move back down to we could see potentially a kind of scenario where we could see something like this, maybe this. But if it's eventually that, then obviously that would be that could be a bullish situation for silver. So looking out for this, 23 is really kind of the main level, but whatever that level is here, 23.10. 23.10 to 23, if they hold, and then we get a push through this trend, through the trend line, I think that could be a good sign for silver, and probably a good sign for gold too. Why might that happen? Well, it does seem like we're getting a bit of a pause in the dollar rally, in part thanks to some strength in the pound, in hopes of a Bank of England rate hike, and sort of general sense that maybe some of the other central banks are going to hike rates too, maybe even quicker than the Fed. So that could be some source of dollar weakness, and obviously that's good for precious metals, and all the other commodities have been absolutely soaring. Just look at the oil. Well, we can look at the oil chart next and see how far it's moving up. And obviously silver, gold and silver just not participating in this commodities rally almost at all. So silver, if you're talking about as its industrial properties, maybe it's got a slightly better chance of getting involved in this commodities rally that's helping oil. Maybe more so than gold, which is more that kind of monetary metal. Okay, now let's look at WTI, and it's been a really neat trend to be involved in. Back from it curved up through the 20-day moving average, but looking at more recent price action, this was the peak, pulled back to the 20-day moving average, rallied up nicely with barely a pullback, hit 76. Pull back to the former peak. Okay, maybe not within a few pips, but you can't go on a kind of points basis. Generally, it's pulled back pretty neatly to the old high. Rallied up to the 76 level. That was resistance a few times. Then rallied up and made its way to 79. So $3 higher than 76. Stalled at 79. Pulled back pretty sharply down through 76 again. Back to the old resistance, but it was only on an intraday basis that went below it. Closed above for 2 days, rallied up to 79, then up to 81, consolidated around 81, now more recently broken up and tagged 83. So based on the current price action, you'd either expect a little move up to 84 and then a pullback, or just a pullback from here, potentially down to 81 again for another opportunity to buy the dip. And if you see the price move through 81 and down to 79, then that's another opportunity. But that would be a bit of a kind of weakening of the pattern that we've seen so far. And so potentially a sign that the trend is giving way a little bit. We are quite well off the 20-day moving average, but we have been on all these occasions too. On all these, you can see that when the price does correct, it's normally when it's quite far away from the 20-day moving average. And we are again at this point, but it doesn't mean the trend is ending. And then you can just see on a weekly basis how we've taken out 76 was that old high, and we've just kept going since. For what it's worth, Goldman Sachs have a target of 90 for the end of the year. We're at 83 at the moment. Okay, let's have a look at the S&P 500. So just not a lot to say other than the fact that we've tagged this same level that we've been mentioning the last few weeks, which has just been acting as a bit of a resistance. If you go to the daily chart, you can sort of see where I've got this RSI trend line through, which, this level worked once, but we didn't get really through the lows, and we've rallied back. And we've rallied right back to it again. This RSI trend line, we've kind of nudged above it, but still sort of generally testing it again. So, obviously there could be just a double top. So it could be a rally right up to the highs, and we sell off from there. But potentially, if you are looking to sell the market down, you can see that it's already starting to sell off a bit. This is, if you are going to sell the market, which obviously it is still a bull market in stocks, if you are going to sell it, then it wants to be at one of these resistances, this or the old high. Otherwise, you're going to be selling too low into what could just turn into a sudden bounce. Which if you try to sell down here, obviously it turns to that. You're trying to sell the break of the low down here, and it just turns to that. So I think selling at areas of resistance is the lower risk option if you are trying to sell. And as I mentioned before, I mean, if you are going to be selling the market at any point, then arguably this time of year, some kind of risks on the horizon. September, October, generally a risky time for the market. This would be one of the better times, even if it's not still necessarily a particularly good idea. All right, last but not least, Bitcoin. As I mentioned at the intro to the video there, back over the 60,000 level and basically testing this supply area created by when we did hit that last record high, which what was it, just shy of 65,000 on our price charts here, was the former record high for Bitcoin. And the price did try to pull back a bit at the start of the week, but that rally was that dip was immediately bought. We're back into the same level again, and you can see it's just where the price kind of rallied up, and then it's stalled for those couple of days, and then gapped lower. We kind of just we've made it through the gap, and we're just in this last little bit of the supply area up here is what's being tested. But obviously, very strong momentum, and it's pretty clear what the driver was. That expectation of a Bitcoin ETF, which was approved. It was a Bitcoin futures ETF, so it's not an ETF backed by quote unquote physical Bitcoin, but it's obviously a big step, and it's going to encourage a bit more investing in Bitcoin from people who like ETFs. So there you go. Looks generally positive for the chart of Bitcoin. Just wary of a possible double top. Okay, that's it. I'm going to leave it there. Thank you very much, everyone. Thanks for tuning in. Good luck trading this week, and make sure to subscribe to the channel so you don't miss next week's video when it comes out. Thanks.